everyone, this is Omeng Tawid from smartpinoyinvestor.com, and today I will be giving you an introductory lesson to building your wealth with stocks. So this will give you a basic guide to investing in Philippine stock market, and will also give you concrete steps that you can do so you can start investing and growing your money using stocks. So, before we begin, of course, we need to define what stocks are. So, stocks is nothing more than a share of ownership in a corporation or in a company. So, whenever you have a stock or also called share of a company, then that means you are a part owner of that company. And as a part owner, you take part in the profit or even in the loss of that company. So depending on the performance of your stock company, you can gain, but there's also a probability of losing or decreasing the value of your investment. So that is stocks or share. It's also called equity. And you are probably familiar with these giant representative companies in the Philippines. So we have here Jollibee, Banco de Oro, SM Prime Holdings. This is Ayala. Then we have your PLDT, a telecom company, of course, Meralco. And there are several other companies that are enlisted in the Philippine stock market. So these shares or stocks are traded in the stock market. So the stock market is the place where people converge to buy and sell stocks. So there are several financial instruments that are available out there that any person can use to grow their wealth. But uh, here we will answer the question, why choose stock market over other financial instruments like let's say bank deposits or time deposits or real estate or mutual fund or bonds. So why stock market? One reason is that it has been established that in the long run, equities or stocks outperforms all other asset classes. So those other asset classes includes time deposits, bonds, and even real estate. So as you can see in this graph, here the blue bars represent the 5-year CAGR or compounded annual growth rate, and then the sky blue bars represent the 10-year compounded annual growth rate. So basically, the CAGR is the annual rate of growth of these different investment types. So we have here inflation or the rate of increase of price of basic commodities. And for comparison purposes, we have here the T-bills or treasury bills. So as you can notice, the stocks has an enormous rate of return or annual growth rate compared to treasury bills and inflation. So that means stocks can give you a protection over the power of inflation. And you may be familiar with the rate of return given by banks, which is as of this year 2015, it's less than probably 3% or 2%. So if you have a long-term horizon, then stocks can give you a better option to making your money work for you. And then here is a chart showing the performance of PSEI, the yellow one. PSEI is a Philippine Stock Exchange Index. So the chart starts from 2000 until 2014. And you will notice that yes, even though there are fluctuations from day-to-day basis, the bigger picture shows that stocks in the long term is actually in an increasing trend. So from year 2000 up to year 2014, the value has actually increased from 1 to 5, which means 5 times. And an accompanying data here shows the percent of return per year since 2010. So in 2010 we have more than or almost 40% rate of return. 2011 is not so big, 4%. In 2012 it recovered 32.95. 2013 not so big again, but still positive. And then year 2014 another more than 20% gain. And as of February 13, 2015, the year to date return in the year 2015 is already 7.51. So as you will notice, as I mentioned, if you have a long-term horizon, then stocks can give you a better option of making your money work for you. So I have to emphasize that stocks is a good option only if you have a long-term horizon, time horizon. If you are probably looking for ways to grow your money in a short period of time, say 1 year, 2 year, less than 5 years, then I don't really recommend stocks for you. But if you have a long-term time horizon, more than 5 years, more than 10 years, then I suggest that you seriously consider putting your money in Philippine in stock market. And then another related data shows the compounded annual growth rate for different periods. So we have for the past 3 years, past 5 years, and past 10 years as of Feb 13, 2015. So as you can see, this annual growth rate indeed is a good return for those who are investing in Philippine stock market. Unfortunately, only less than 1% of Pinoys are actually investing in stock markets. So not so many, and only very few knows how stock market can reward those who are investing in it. And compare that with other countries. So here in Singapore, there are more than 33% who are locally participating in their stock exchange. And then we have here Japan, 25%, Malaysia, 18%, this is Hong Kong, and then Korea. So the Philippines has considerably small number of local people investing in Philippine stock market. Probably one of the reasons is that, well, this is not really taught in our school. But now, with this kind of information that I will be showing to you later, you will know that it's actually very easy for you to start investing in Philippine stock market. So, here is one big question that we will also answer. How does one make money in stock market? So, there are actually only two ways you can make money in the stock market. So, one is by price appreciation or capital appreciation. And then the second one is dividends or receiving dividends. So we tackle the first one, capital appreciation. So capital appreciation is what they say, buy low, sell high, or buy high, sell higher. So that is basically from the term itself, the value of the company appreciates or increases, which means the price per share or the price per stock has increased. So in our representative company here, BPI, so back in 1992, the price per share of BPI is only 4 pesos and 31 cents per share. And then by the end of year 2012, the BPI price per share appreciated to 95 pesos. So it has jumped very big. So assuming you had 1 million in the year 1992, your investment value could have risen to 37.71 million pesos, or an equivalent of 18.9 compounded rate of return. So this is one of case of one way of gaining in the Philippine stock market, which is through capital appreciation. Then another more thematic case is with the stock DMCI or DM Consuni Incorporation, which is a construction company. So in the year 2011, its price of stock was only 26 centavos. That was 2001. And then by 2012, the price appreciated big time to 58 pesos per share. So in that more than 10 years span of time, assuming you had 2,800 pesos in year 2001, your money will be more than 500, half a million today by the year 2012. So this is another case of capital appreciation. But again, I have to warn you that this is not always the case. There's also a possibility of stock price going down, which will translate to your investment money also going down in value. So you need to be picky, you need to be discerning on which stock to put your money on. So that is for capital appreciation. And then the second way of earning in the Philippine stock market is by receiving dividends. So dividends is when companies give a part of their earnings to its shareholders. So whenever a company earns, the board of directors can decide to give a part of their retained earnings to its shareholders. So for example, in one year, the company can say, okay, we will give all our shareholders 5 pesos per share. And then assuming you have 5,000 shares, so that means you will receive 5 pesos times 5,000, which is 25,000 pesos per share. So that is your money to every stockholder of that company who is declaring dividends. So the dividends can be in the form of cash, or it could also be in the form of additional shares. And one thing to note here is that companies are not necessarily obliged to receive dividends, or I mean to give dividends. So there are several companies who are I can say consistently giving dividends. So you can also be looking at those kinds of companies if you are the type who wants to have a uh, sure type of gain from stock market. So that is dividends. And now, so those are the ways you can invest money, or I mean, you can gain money from stock market. But question now is, how can you start investing in Philippine stock market? So there are only three ways that you need to do to start your money working for you in the Philippine stock market. So the first step is, well, you need to invest in yourself. So buying stocks is buying, which means you need some money. So you can really buy your first stock. So any buying entails money. So before you can be able to buy your first stock, you need to invest in yourself. You need to save a part of your income, save a part of your salary, and allocate that into your investment fund. Then once you have that money, well, it can be as small as 5,000. You can readily start with that little amount of money, 5,000. Then once you have that, you can now open your broker account or stockbroker. So, fortunately, at this period in time, you can have your online broker. So you just have to look for an online broker like callfinancial.com, and then open your account there. And once your account is approved, then you can now do all your transactions online, which means you can buy or sell shares through your computer that is connected to the internet, or even possibly through your smartphones. And you can also see the performance of your portfolio, how your company is growing through your computer or smartphone. So that is the power of having an online broker. And then once you have your broker, then you can now decide your game plan. So are you going to be investing? Are you going to be trading? So basically the difference is on the time horizon that you are going to have in your investment. So investing is generally long term, picking the giant companies that you believe will be there for the next more than 10 to 20 years. Trading is more on market timing. So you look at the price of the stock and not necessarily on the fundamentals. So I will be giving you a closer tutorial on the difference between the two. But as of now, what I recommend as use or just starting is to look at investing. So just pick the giant companies that we have here in the Philippines and do your investment there. So your game plan can be buy and hold. First game plan, which means you buy a stock, you buy shares with your initial money, and then you hold on it. Well, not really forever, but you hold on it for a long period of time. So buy and hold is a good strategy if only if you have a big cash at the start, and only if you are sure that the company you are putting your money into is a company that will really grow in time. So it's useless to buy and hold a company that is or that will be losing in value through time. So also buy and hold does not mean not monitoring. So even though you are buying and holding, you still need to monitor your portfolio from time to time. Maybe not as frequent as market timing or market timers do, but a monthly checkup is a good practice for this buy and hold strategy. Now, a more active approach is what you call market timing. So, market timing is timing the market. So, you study the price action, and then you make your entry and exit decisions. So, this is a complicated subject, but and I will also give future tutorials here, but basically that's the gist of it. Market timing is studying the price action of the stock. And then the third game plan that you can have is a more passive kind of strategy, which is averaging, or in our case peso cost averaging. So we will highlight this one in our next slides. So what is peso cost averaging? So peso cost averaging is a strategy where you buy stocks of great companies regularly. So here we can notice several key terms. Number one is regularly. So meaning you do it consistently. And then the second is great companies. So you need to make sure that what you are buying are actually great companies. So you do not want to do peso cost averaging on dumb companies. So how does peso cost averaging work? So peso cost averaging, as I mentioned, is you need to buy regularly. So the period can be monthly or quarterly or probably every 2 weeks. So it depends on the capital that you have. And once you have set the time period, say monthly, then you're going to buy every month, regardless of the price. So here, this sinusoidal curve represents the price of the stock, and this violent curve represents your average price. So at month 1, if you're going to do peso cost averaging, then you will buy month 1. At month 2, As you can see, the price from this top actually went down. You still buy here, so you really don't mind the price whether it is up or down. You just keep on buying, and then at price 3 you again buy, price 4 buy, month 4, month 5. And effectively what happens is that you're actually averaging. So the average price that you're going to achieve will eventually be lower than the market price. So the difference will of course give you your gains through that averaging activity. So one question is, does peso cost averaging work? So here we are given a simulation of a peso cost averaging from the year 1997 to year 2007. So that is mm, so that is how many years? 10 years. Yep, 10 years. So in that span of 10 years, we have assuming your basket or your portfolio consists of these companies. You have Ayala Corporation, BPI, Metrobank, San Miguel Corporation, TEL. So assuming this is your basket, and then you started investing at the top of a bull market. So a bull market means a market going up. So if you started investing at the top of bull market, then that means the next thing that's going to happen is for the market to go down. So the market is represented by the green curve. So you started investing here, and then you started at the top of the bull market. That means the market started going down by the time you invest. So you are unlucky at this point in time. So if you do your monthly peso cost averaging activity, so your stock portfolio is actually fluctuating, but through time it still increases its value by the time the market recovers. So through the entire period, the market only gained 4.58%, but your portfolio or your basket still increased by more than 200%. In comparison, the blue curve, which represents the 91-day treasury bill, only appreciated by 47%. So the T-bill can be used as a benchmark for comparison of performance. So even though the market only increased by 4.58%, because you are faithful in doing your monthly peso cost averaging investment, you're still rewarded by more than 200%. And that is because you started at the top of a bull market. So in this case, it's clear that peso cost averaging worked. Now, let's say you're more than lucky at this point. You started at the beginning of a bull market, which means by the time you start investing, the market actually started to increase. So still the green line. And then same activity, but this time from 1990 to 2007, so around 17 years, you still do your monthly investment via peso cost averaging. So by at the end of the period, the market increased by more than 250%. The treasury bill only increased by more than 150, but your basket consisting of the same stocks increased by more than 1800%. So the difference is in performance is really huge. Now I have to remind you that this basket is only a representative. So I am not saying that you buy these stocks, but what I am saying here is that carefully choosing the stocks that you have in your peso cost averaging will give you a good return over time. So I have to emphasize again that this is a long time type of investment. So those are just basic strategies that you have. So in our next lesson, I will be giving you uh, several lessons on how you can open your account, specifically on filling out the forms, how to submit it for OFWs, what can you do to reopen your account, and then we'll also give you some tips and tricks on how to choose stocks and when to buy and sell them. But hopefully I gave you those kinds of information. Again, I have to remind you that the stocks is an ideal type of investment for those who are going long term. So if you have less than 5 years, I don't recommend that you go into stocks. But if you do, but if you have a money that you want to use in the next 5 years, then I suggest that you seriously consider stocks as part of your alternative investment. And as my last words, as you can see, your time is your best ally in your investments. It's important that you start now, you start as early as you can, start young, and start smart. Be a smart Pinoy investor. And if you have other questions, if you have comments to this video, just go to our Facebook group, Smart Pinoy Investor with Oming Tawid. Just search for it and click join, and you can ask your follow-up questions or comments and feedbacks in our Facebook group. Alright, so that's all. I hope to see you in our Facebook group to answer all your other questions. Thank you, and see you in our next video. Have fun investing, everyone.